How are you doing? This is David W. Williams, also known as Diamond Dave. I might be starting a little bit early because I think I got the times mixed up ever since I moved. It's a time change between my computer and YouTube. YouTube does not adjust to where your ISP is at. They're trying to adjust for the time. So sometimes when I'm putting the time of the actual live stream up, I think it doesn't correlate to where I'm currently at. And sometimes I get the times mixed up. And one of the reasons why I got to get it out early today is because gym's still on the New Year schedule, so they closing early. So I need to go ahead, drop this video, and get in and out of here before the gym closes. I think they're closing early today. Miss Lady L, how you doing? I appreciate you coming through. So if you can hear me, let me know what part of the country that you're coming out of. Really glad that everybody's here, top of the year. The fortunate thing about how the year kind of fell this year is that we're at the top on the weekend. So we get ready to go into a brand new market year on the Monday, as opposed to having a hit during the afternoon. What's going on, Katrina? What's going on, Donald Watts? So I appreciate everybody coming through. So really quickly, what we're going to do since we're at the top of the year, if you watch this video, really try to do like some house cleaning real quick and kind of set the tone for the year. Because I think it's really, really important, and I kind of talked about this in my Weekend Stock Market Talk video, that a lot of people really need to decide how they want to come out of the gate this year. I think it's really, really important because what happens in the way the world kind of works is that, you'll look up and it'll already be summertime, which means the year is pretty much over. The kind of the way in which we've situated our societies to where there's not a lot of attention on what's going on until we start getting into going back to school, which is towards the end of the year. And by that time, the year's pretty much over. So that you finally look up and realize, okay, the year's pretty much over. And now we into a new year. So you'll look up and it'll be 2023. So I really want to encourage everybody to really get to what they need to get to early, get their best foot forward, set a foundation down that you can build off of, and just make your mind up this weekend how you want your quarter to look like. Don't worry about the year. Just make your mind up this year how you want your first 90 days to look like, and then apply yourself and see yourself as accomplishing your first 90 days. What we're going to do here, and I want to tell everybody, if you see my video, because what's interesting is a lot of my non-market based videos, they get the most views, and there's nothing wrong with that. I appreciate that. However, it brings people in that are really not market focused. And I hope that you become market focused if you hang out here long enough, because I really believe that understanding the market is going to put you in the best position to be successful. But I want to really reiterate to people, this is 2022. This is a market-based platform, right? What I'm getting ready to do is probably start another channel. I just privatized all the videos from my old marketing platform that I had on here before. I'll probably start a whole nother YouTube channel, and I may do mindset. So I may create a whole new mindset channel. So probably we'll still here have the market-based videos and the laws of game stuff, but we'll probably do a mindset channel in which I can kind of go into some of the stuff that I'm reading and bring people, because I really think that the personal development space is a good space for me to be in, because really trading got me to focus more on my personal development. And that's one of the reasons why we brought the one sister into the VIP. And I really think that's where most people are going to find their edge. I don't think they're going to find their edge by the fact that they bought a scanner or, they have a particular way in which they do options or they trade. I really think the real edge is your personal development, really how you really start to understand your psychology and you start to understand how to program yourself to be successful, right? And that's some of the things that I really want to start going more into, because that's how I really became successful. I kind of programmed myself to have the success this year. And then on my journey, I was able to attract people that wanted to help me. But it was me programming myself to do it, as opposed to me sitting back and hoping that somebody showed up. And that's something that we're going to go into. So that's most likely what we're going to launch out if I keep things kind of based on what I'm thinking. So I want to just give people a heads up on that. I probably will create an alternative channel kind of based on mindset, in which I'm going to kind of go into some of the books. So if you don't like to read, it's not going to be a channel for you, because it's going to be based around reading. Because something that my cousin did, she inspired me by telling me that she read 100 books this year. And this is a married woman that has a really high level profession. And she also writes music. She also performs in a band. So for her to read 100 books this year, and I'm not a fan of people just reading 100 books, because I probably read the same book 20 times this year. But of reading and making sure that you're educating yourself and then you're going out here in the world and applying it, she really inspired me to kind of understand that there's a lot more I can be doing in the short amount of time I have on this planet. So that's really what we're going to go into, because I really believe that the psychology is the final frontier for us to be successful in what we're trying to do, not trying to figure out how can I learn the new option spread strategy, where in reality, your psychology is what has had you where you're at for so long. but nobody really wants to deal with that because a lot of times it's not as exciting. And it really focuses on you having to deal with yourself and then you having to decide to make a change. So that's what we're going to go into. So that's pretty much what a house cleaning is on that particular area. So what we're going to talk about now is how I became so successful trading put options, right? And this is something that I really wanted to go into at the top of the year, because if you study a lot of my posts, I put up a lot of put options. And one of the reasons why I did that is because there's a narrative in the market that, well, you're only good because the market is green, right? You're only good because we're in a bullish trend. So we've been fairly in a bullish trend for like the past 10 years. And there's a narrative where the only reason why you're having success is because the market is going in a direction that's positive. And if the market turns around, it won't be. So one of the ways I want to do is I want to disprove that theory, because as a trader, you got to trade what's in front of you or you got to sit out, right? But you should not have the narrative as a trader where if the market is red, I can't trade it because I'm only good when the market is green. So I really focus and spend a lot of time on trying to learn how to trade red markets and how to learn how to find companies that I thought were overpriced in comparison to their value. And I believe that once the market realized that they were overpriced, they would sell off. And I got really good at locating those scenarios and then learning how to try to extract some type of profit out of them. And when I figured more, and I kind of put this video in the course, is that I'm a lot more profitable if I take a long-term strategy. So if you look at all the trades I have right now, currently going on right now, they're all longer-term plays. None of them are short-term plays, because I realized that really where I'm going to be successful is with a longer-term strategy. However, I did this because I wanted to disprove the novices and the people that also really don't understand the market, is that you don't just have to wait for the market to be green or to be bullish for you to be successful in this market. And once you really start to really understand this market, you understand that there are people whose intent it is to collapse the market because that's how they're going to make money, right? And you got to really understand it. And you should not be fearful of either scenario because you know how to make money out of either scenario. So that's the power of being a trader. So when you're a trader, essentially, you can create your own economy. And that's something that I'm going to really start focusing on in 2022, is getting people to understand the benefit and the value of creating your own economy. Because once you can create your own economy, yes, because we're not billionaires and we're not trillionaires like some of these people, we can be impacted by macroeconomic issues, but we're not as impacted as other people. There are other people, the majority of the world is totally dependent upon somebody else telling them they can go make some money today, right? One of the reasons why I wanted to bring people into this particular space is because I wanted them to see the power of developing an ability to make money, and nobody else can tell you that you can make money. They can't tell you that you can't make money because you're a woman. They can't tell you that you can't make money because you're black, green, purple, gay, straight, trans, whatever. They can't even see you. So you have the ability to be independent of them. And this is one of the reasons why people are trying to go to trading on the blockchain, because it creates even more autonomy, where you just see transactions. You don't see anything else. So that's what I wanted to talk about. So what I want people to ask, and since we got 24 people on the actual chat, and many of these people that are on the chat, not all of them, but many of them, but you can still give your opinion, even if you're not necessarily a trader. Why do we think, right, so many people struggle with put options? And one of the reasons why I'm asking this question is because it took me a long time to really understand put options. But because I didn't understand it, I really focused on it a lot more. And I kept focusing on it and focusing on it and focusing on it and focusing on it until I was able to figure it out. So the question is, why do we think so many people struggle with put options, and why people are answering that question? We're going to go ahead and give you the sponsor of the show. So the sponsor of the show is www.thehighestpaid.online. And this is an online options trading academy that was created by myself and another woman that operates out of Virginia. She's my mindset counselor. So she didn't put the school together, but she contributed to the content, contributed to the curriculum. She's very much a value add to what we do. And our goal is to take three people in the society, the one that doesn't like the fact that they make a certain amount of money, the people that already know at 2022 how much money they're going to make this year and they're not satisfied with that, people that are really deal with a lot of income instability, right? They are a lot of times under threat to have their money taken away from them. And also the people that don't like the fact that they got to take so much time away from their family to make the money. We figured out how to solve that particular problem by teaching people how to trade the options market. And we have success in this particular area. I don't look like the kind of person that should be talking about finance. I don't look like the kind of person that should be training traders, but I figured out how to do it. If the person is consistent, they're serious, and they really want the results, right? And the goal is to help you create your own economy. Because once you focus on your own economy and you focus on building that out, it's going to be impossible to stop you, because what you'll find out is what the majority of the world is not focused on building their own economy. And because I focused on building my own economy, I was able to collaborate with another person in another part of the country, and I'm able to generate revenue on what I do, feed some of that revenue to her, and then she's able to add value to the people that I brought in. So we're doing business amongst each other. It's not just I'm getting all the money. I'm getting the money and I'm bringing the money and I'm kicking the money out to other people, right? And then we're able to build our own economy that way. But to do that, you got to focus on building your own economy on some level, right? Don't have to be on the Bill Gates, Warren Buffett, Bezos level. And that's something that we're going to talk about because I think that's a perception a lot of people have. So that's a particular offer, right? We're still running the Black Friday sale. That sale will be over probably tomorrow because I know I was going to run it as a December sale. It's pretty much the first day of the year, but we'll end that sale probably sometime tomorrow. So you still got time. And in January, we will be raising the price up, right? Because just the video I put in there on Peloton is worth the cost of the course, not including everything else. If you understand how to utilize that, you can make money in this market if you apply yourself. What's interesting, somebody that's supposed to be a financial expert, they're telling people to buy Peloton, right? I would wait till the earnings comes out first before I told people and gave people that counsel, but everybody sees the market differently. And so this goes to show you that you don't have to be quote unquote an expert and you don't have to be quote unquote certified to really understand this market. Because I would tell people to wait until Peloton puts out earnings and they get their fourth quarter earnings print before you decide to buy that particular company. Because if their fourth quarter earnings print doesn't meet their guidance, they're going to continue to sell off. And they've lost 70% of their value or 70% of their share price since the beginning of this year. So let's go ahead and get into it, right? Because that's the sponsor of the show. So the question is, why do we think so many people struggle with put options? Okay, so Katrina says, because we've been told to be positive. Teeth, what's going on, man? I ain't seen you in a minute. Is ignorance and fear. Jermaine Scott is because they think stocks only go up. Miss Lady L says, think about it. You betting against the same market you want to make money in. I agree with you there, but the issue is that you can make money on both sides. So I agree with you. But you can make money on both sides. And there are people that look to short the market because they believe that they can cause a panic or cause a fear and get people to sell. And we're going to kind of go into that. We talk about the neurosis of the market. It's difficult for people to understand how much. Yeah, and I think in our Blue Sox, I 100% agree with you because we think coming outside of like a traditional market space, we think if a business is doing bad, that means it has to be bad for everybody. And we don't understand that a business can be doing bad. And because all market activity is based on trading, it can be good for some people. But we've been programmed to only see stocks as a long-term investment. We don't understanding that it's the trading of the stock that creates the share price. And what we don't understand that because we've been taught to stay away from trading. But without trading, you don't have a share price because the share price is determined by what two traders have agreed to pay on it. That's what I don't think we understand. And this is why I'm very passionate about getting us into the market, because once you understand the market, you understand every market. And all the markets now, because of technology and because of the year that we live in, they're correlated. They're going to be even more correlated this year than they were last year. And they're going to be even more correlated in 2023 than they were in 2022. And so I think by telling working class people that they can't be in the market, but telling them like, you know, we can be astronauts and neurosurgeons, it doesn't make a lot of sense to me, but that's just my personality. But that's a really good comment. It can be hard to see resistance level when stocks keep breaking out all times high. It's easy to get puts when you see a downtrend. It definitely. But you got to, to me, you have to be able to see support and resistance from the gate. And it doesn't mean that my support and resistance is going to agree with somebody else. But you got to be able to see it from the gate. And I think most people are trading and they don't see support and resistance. GC, what's going on, man? I appreciate you coming through. Yeah, definitely. In the chat, and I thank you. And like I said, I think it's our education on business. We think that a business going down is bad for everybody. It's not necessarily that way, right? So what people got to understand is what we're going to kind of go into. I'm going to kind of go into my breakdown. And so what I want to encourage you to do is if you can apply any of this to your trading, it may be able to help you. And let me know if you're able to apply some of it to it and get a positive result or even a negative result, because I can kind of figure out how to maybe tinker it. So one of the reasons why I've been so successful with puts, right, is I understand the risk associated with my activity. So the biggest reason is I understand the risk. Now, what are the risks of the downside of the market, right? people really got to understand. First off, we got 43 viewers. We got 26 likes. I want to ask you to get the likes up. The likes are free, right? Don't cost you anything to hit the like button. The risk associated with any downside play is first. We understand that a stock can go into infinity, right? It can go into infinity. It may not go into infinity, but there is no cap on the price of a stock. So when you understand that the stock can reach a point into infinity, it can go up forever. But the risk of playing the downside is it can't go past zero. So when you're playing the downside of the market, you're taking on more risk. Why? Because your profit is already capped off. It's capped off at zero. Now, implied volatility, news, things of that nature, volume can impact how much money you can make. So if a play is falling gradually, you may make less money than a play that falls 60% overnight. There was, I think, AALK. It lost because they had a drug that didn't go through the third part of the trials. It didn't make it. I think they lost like 40, 50% overnight. So you open up, there's a massive gap down. It starts selling off. So because of that volatility, the put contracts appreciate really rapidly right out the open. But because zero is going to always be the stopping point, that's the wall you're going to hit. There's a lot of times a limit to how much profit you can make, right? But what can impact that, we talked about before, is volatility. So if there's a lot of volatility in a short amount of time, you can make a lot more money than something that's going to fall gradually over time. So the risk associated with is that you're putting your money on a play in which you already know it can't go into infinity. With a call option, it can go into infinity. You can put your money on ticker XYZ and it can go into infinity. Now, what's the probability of doing that? It may be low, but there is a probability. There is zero probability that the share price will get less than zero because it can't. There's no such thing as a negative share price. There's negative interest rates, but there's no such thing as a negative share price. So I understand the risk associated with my activity. And then we're going to kind of go into the third point. But when you're buying put contracts, you have to know the risk that you're taking, right? You're putting your money into something to where your profit is going to get capped off at zero. And really, the closer you get to zero, the less likely it falls. So one of the things I noticed with put contracts is that once we start getting around $10, it's less likely it keeps falling, because what a lot of times will happen is you'll start getting discount shoppers. And discount shoppers are people that their attitude is, it's so cheap and this is a company, it's going to go back up. So let me buy now at $10 with the hope that maybe I can get it to go to 15. And so a lot of times that'll stop the fall. Okay. So that's one of the things I look for, that if a company's trading around 10, maybe $10 to $12, I maybe don't play it unless I think that it's something more catastrophic that can happen in the future, because you'll get those discount shoppers to come in. And a lot of times they'll just look to try to play it back up maybe to 15, because now the stock is cheap in their mind. And a lot of people, their perception of the market is that I would rather take a risk with something cheap than take a risk with something expensive. So they would rather go buy a beaten down company at $10 and put their money together and go buy Apple. And that's just how they think. So I don't try to correct them. I just understand that's the risk associated with the play. So once I start looking at a certain number, my job is to sit back and continue to observe it, because I can get caught by the discount shoppers. Then also a lot of times between maybe 10 and 20, you can get the day traders. And what they'll do a lot of times is trade it based on daily movement, because it's less expensive for them to get in, because it's easier to day trade a stock that's between $10 and $20 than day trade a stock that's the cost of Amazon. You go day trade Amazon, you got to have millions of dollars, because I think the share price is around $3,500. So that's the issue. So you got to kind of understand the risk of associated being in this particular type of environment. So what I'm looking for is companies that I think are going to have a gradual fall, like Peloton, who I bought the contract in July that was a January expiration. So I could have still been in that deal right now today, right? But I didn't want to rebound it. Once it get around $45 and started trading sideways, I was worried about a rebound. But I could have still been in those contracts right now, because those were July contracts with January expirations, right? So they essentially was like 6-month leaps, okay? So a lot of times that's what I'm looking for, or I'm looking for a scenario to where I think that bad news is going to cause the rug to get pulled on this company. And I believe that based on the internals of the company, the fundamentals of the company, the rug pull could be very dramatic, right? So that's the first thing. And if you got any questions, hit me up in the chat and I'll answer all the questions when I keep going back through them. Third thing is I understand how the market actually works, right? And that's something I really am passionate about teaching people, how markets actually function, because we haven't been taught how markets function, right? We just haven't been taught this. And one of the reasons is because we're not supposed to know this kind of information, right? That's how they keep us in our place, right? And then they send people to us that's supposed to represent our best interests, but they still not going to teach us how markets actually work. So it's easier for you to be successful in business once you understand how markets work. It can be difficult because you don't understand how markets work, but now you're trying to go into business. But we tell everybody to go into business, but we don't endeavor to teach them how markets actually function. So I understand market profile, right? I understand institutional ownership. I understand, business models. I understand the 10-year rate. I understand risk, growth, value. And let me kind of show you what I'm talking about. So let me get rid of this screen. Let me bring this screen in real quick. I understand. So here, do I have it? Okay, so like market profile, right? So I kind of understand where the buyers and sellers are at in the market, right? I understand how to read charts. I'm not a technical analysis superstar. That's Lance. I brought Lance into the channel. She got her course being sold. Very, very attractive price based on what she's going to be able to teach you. She's the go-to person for technical analysis. But I understand the fundamentals of technical analysis because I understand supply and demand. I understand price action. But I understand how market profile works. I understand how institutional ownership impacts companies. What do I mean by that? A lot of times a company can be performing badly, but because their institutional ownership is so high, they won't sell off because institutions have not decided to get out of that deal yet. And if they don't decide to get out of the deal, it's not going to sell off. Doesn't matter how badly they perform. A lot of times when they decide to get out of the deal, it'll be very dramatic, right? They'll be very dramatic because based on their ownership, they'll decide to get out, right? And so these are the things that you got to look at. So when you're looking at a company and you're expecting it to collapse, like DoorDash has, last time I checked, around 88% institutional ownership. Now they've sold down really hard off 250, but I don't see why DoorDash is over $50. But they got a lot of institutions that think that DoorDash is going to be the play. So what you may see is DoorDash just keeps selling off gradually over time. It may not be a dramatic because what institutions may do is exit that particular deal really, really slowly over time. When you're looking at a company that has very little to no institutional ownership, let's say under 50%, the sell-off can be a lot more dramatic. Why? Because institutions have not created a price floor to keep that price over a certain number, right? So once it starts being sold down, there is no floor. Because what institutions will do is create a price floor and say, well, you know what, because we believe in this company so much, as shares become available at this price, we have conditions set up to just buy them because they're going to support the price. If there's nobody there to support that price, it can get very hard on people, right? And that's what we saw with Peloton. Peloton kept diluting, but it was losing institutional ownership at the same time, right? And then also, if institutions got in at a really, really low price, they may not come in to save the company till it gets back to that price. So institutions may be like, we got into Peloton at $20. So we won't come in to save Peloton until it gets around 20. That's an attractive price for us. So we don't care that people are leaving at 120, 130, 100, 80, 70, because we didn't buy it at that price anyway, right? That's retail and people that was late to the party that bought it at that price. Business model. What is the business model of the company? Do you think it could be successful? And we're going to kind of go into that on the next point. Do you understand what a business model is? Because when you're looking at the equities market, we're not in the commodities game. We're not in the bond game. We're in the equities market. So looking at equities, the equity represents a company. Do you think based on the business model, this company can be successful? Right? Do you think they have a chance of success? So let's take institutional ownership off the table. With all things being equal, do we believe this can be successful based on their business model? And so because we're not having these kind of questions, we get pitched stuff. I don't call any business a scam till it's proven to be a scam. I just say, I don't like the business model. I don't call any business a scam. Because to me, if you go to your college and tell them that you didn't like the class and you want a refund, you wait on that refund. Wait on that to see if they give you the refund, right? And these are institutions been around over 100 years. So I don't call any business a scam 9 times out of 10. I just look at the business model. And I try to determine, well, based on the business model and how they're going to conduct business, what is the likelihood that they're going to be successful? So I knew Nikola was a scam, right? Because they did not have the ability to do what they said they were going to do. But that was a scam that could make me some money. So as opposed to me making YouTube videos, a million YouTube videos about why Nicola's a scam, I'm trying to figure out how can I get some put contracts on this company? Because then once it comes out through short sellers that have the ability to influence the market that Nicola's a scam, now I can put myself in a position to make some money. Right? So I want to create my own economy around trading it as opposed to creating my own economy by making YouTube videos about everything being a scam. But everybody move how they move in this marketplace. 10-year rate, real important, right? As a trader, you got to understand the 10-year rate, how that impacts inflation, how that impacts where people put their money, because the cost of money being less or more expensive can influence. So because the 10-year rate was so low over these past 2 years, we've seen a lot of money get thrown into the market because it was very easy for people to get access to liquidity. So now you got cheap money. We throw it into these particular companies that we think can get us a lot of growth return, and then we're able to get a higher return than what it costs us to get the money. 10-year rate has a lot to do with that. And we saw last February when the 10-year rate went to 1.6, we saw a massive sell-off in the market. And then the risk, if a company is perceived as risky or a scenario is perceived as being more risky, how does that impact that particular company? Because all of these hedge funds have risk analysis, right? Based on how they're trading at that particular time. And they may assume or may feel like a particular ticker is too risky. That means that we have to get out of this deal at a certain percentage. Or they may feel like we got to totally get out. When you look at the cruise lines during the pandemic, everybody sold out. So the narrative that is oversold was not actually accurate because everybody said we got to get out of this deal. Then growth of value. So growth plays have been really big over the past 2 years. We're seeing a lot more money flow into value, right? And so you'll see this when some of my plays are shown to you publicly in 2022, the difference between growth and value, right? And this is what I really want to help people that want to help, to be able to look at the market and be able to create a narrative around this stuff. Don't mean you're going to be right because there's opposing forces in the market and you don't have the money to move the market the way you want to. But we already talked about the only risk-free investment is go buy you a U.S. Treasury bill or a note or a bond. Everything else has risk associated to it, right? So there is no way where you can put your money outside of investing with the U.S. government where you're guaranteed to get a return. So then you just got to determine based on your analysis and the way you think the market functions, is the risk associated, is the return that you believe you can get out of it, and is it acceptable based on the risk that you got to take to get it, right? But trading options is no different than buying equities. It's not, and we're going to go into that. There is no difference between the two. There is no difference between trading options and buying bonds, or buying going into commodities, or going into real estate. There is no difference between them. They're all a speculation based on your narrative around the market, right? And they're all way more riskier than you investing with the U.S. government, right? And you really got to understand that. 3, right? I understand that most businesses fail, and that's not an excuse for you not. That's not an excuse for you not to go into business. So you don't use that most businesses fail as an excuse for you not to go into business, right? Don't use that, okay? Because we're dealing with a lot of people whose belief system has been so beat down by the society, they looking for any reason not to try to change their life. But because I understand that over time, most businesses will fail, right? Then it means that a lot of businesses that are going public will fail. That's just what it means. So looking at U.S. Steel right now, U.S. Steel is not the company that it was 100 years ago. Ford's not the company it was 100 years ago, right? So people got to understand is that a lot of these businesses that are going public really don't deserve to go public. They really don't. Okay. I don't care how much PR they put behind them. They really shouldn't even be publicly owned businesses. As a result, the longer they operate, based on my analysis, the more likely they go under. Right? Because in reality, any business that is under 10 years is a startup. And that's why people got to understand the narrative of failure in business being a negative thing. It's only a negative thing to our people. Nobody else cares about that. Why? Because they know most businesses are going to fail. Okay. So Elon Musk telling people that he thought Tesla was getting ready to go bankrupt, and they had a way to get out of it, right? That to his people, it's whatever. That's what you did, what you had to do. But if he would have went bankrupt to other groups of people, okay, you're a failure, right? But most businesses are going to fail. And that's what people got to really understand, is that the society only tells the story of the person that was successful. They don't tell about the thousands of businesses that didn't make it, right? Because they want to keep you believing that, you know, there's a guarantee that you're going to be successful in business. No, there isn't. Because we saw Peloton get hammered this year, right? After having a great year. They may not be here in 3 years. Okay. But it's not a indictment of the management team. It was really their business model. And it's really the fitness space and things of that nature. But it's not like they're terrible people because Peloton went under. Most businesses are going to fail over the long term. That's just how business works in America, right? And there's a lot of reasons that we're going to go into that also. So when you understand that most businesses, especially publicly traded companies, right, are in a very precarious position because everybody understands that most businesses fail. Once your business starts having issues in certain areas, revenue growth, things of that nature, they don't want to be the last person in the deal. So people a lot of times will look to get out early as opposed to be the person to get out late, because their attitude is, I'd rather miss 5% this quarter than stay in a quarter too long and lose 30% over what I've gained. So let me just go ahead and get out now with my 15%. Okay. Next thing is I understand the neurosis of the market. Now, what do I mean by that? Let me show you what I'm talking about. We're looking at cross-border investments have grown substantially by 2009. This is just a JPEG. I just want you to understand is that money moves all over the world. This is a neurosis of the market. We are in a market now to where there is almost a fanatical desire to get returns. Why? Because the people that have a lot of money have a ridiculous amount of money. They're worried about losing it. So what they're looking to do is, one, how to separate their risk from their way they make money. And what do I mean by that? So let's say I make money doing 1, 2, 3. I now take those profits and I invest that in an area that don't have anything to do with 1, 2, 3, right? So there's not a overlap in risk, because what I don't want to do is make money in 1, 2, 3 and then invest in 1, 2, 3. And then if 1, 2, 3 goes down, not only do I lose my revenue for my business, but I also lose all the money that I've invested. So as a result, there's this neurosis of always trying to figure out where the return is going to come from. And the way in which these people have developed the world, there's more capital amongst this small group of people than there are places to get a return. Because if you look at this map, right, you see 64, 63. Where is the 64 and the 63 at? It's in Western Europe and it's in America, right? You see Japan with a 26. You see the Chinese area with 29. And you see other places in the single digits. And there's a reason for that. It's the way in which they develop this world. So you see all of the investment money going to certain regions, also going to Asia, but really the largest continent of the world don't get a lot of investment. That's a reason why. It's a reason for that. You see Latin America getting very little investment. It's a reason for that. So the problem is that they can't even get a return out of really the majority of the world, because Africa is really the largest continent. This map really is false because the United States can fit inside Africa. So really the largest areas of the world, you can't get a return out of it. Not acceptable to the risk that you think you're taking as a result of lack of development and really of undermining of governance in places in those areas in which we could get good investment. So there's this fanatical desire to keep moving the money around, but you don't really have enough places to move it to get the return, which creates more neurosis. It creates more anxiety with these people, because the way in which they've gotten the capital that they currently have now is they underdeveloped other parts of the world. So let me give you a really quick example for my Caribbean people. The reason why we used to rob these people coming out of the Caribbean is because they was coming out of Central America with gold. They were trying to get back across the Caribbean to get that particular gold to Europe, right? So instead of them taking that gold and developing Central America, they just strip mined Central America, took all the gold, took all the silver, and took all their money to Europe, or went west and took that money to Asia so they could mint it in the Philippines and took the money. So while they was doing that, they weren't developing that part of the world. As a result, you can't get a return out of that part of the world. right? In America, we use slave labor and we reinvested that money back into America. So as a result, you can get a return in America because we essentially industrialize America. So because I understand how they built this thing out, I know how they're going to conduct themselves in the markets because I know exactly what kind of people I'm dealing with. So when the situation doesn't look the way they want it to look, a lot of time there is a fear that I'm going to lose. So let me pull out and go somewhere else real fast. And they just keep doing this over and over and over and over and over and over again, right? That's why you get, pandemic news and the market turns red because they program these algorithms to do this, okay? Next thing, this is a winner-take-all society. What do I mean by that? They built this society where if you win, you get everything. Our political system is a winner-take-all society. Our sports environment is a winner-take-all society. They built this society to where if you win, you just get everything. So if you're not winning, in their mind, you get nothing. So the companies that can't figure out how to lead, a lot of times in their mind aren't worth any investment. So that's why a lot of people would tell you that invest with the leader in the space. Why? Because it's a winner-take-all society. That's what they built here, right? We live in a political system where we got two political parties. If you win, you represent the government. The other political party don't really have any say. They're just the opposition party now, right? This is how they built the society out. So that's why people would tell you your safe investment is always with the leader in the space. Why? Because in their mind, if you're not the leader in the space, you're not worth the investment. Now, I'm not saying that you are worth the investment if you're not the leader in the space, but this is their psychology. So when we're looking at companies to where they don't look like they're winning, a lot of times they'll just pull out, right? Because they don't want to invest in the second or the third or the fourth or the fifth. They teach you when you go to their marketing schools, and I know because I've been there, that you want to be one or two in the market, else you want to get out of the market, right? They teach this to you. You want to be one or two in the market, else you want to get out, right? So you either got to build your own market or you got to get out of that market because you won't attract investment if you can't prove that you're one or two or you're on your way to being one or two. So that's why you see these companies like Uber, like Lyft, like DoorDash, where they go into a market, they're a negative profit, but they amass a lot of capital, and their job is to take as much market share as possible because they believe if I can take as much market share as possible and I can force all my competitors out of the market, I can be number one because why nobody else is in the market. This is what they teach these people at the Harvard business schools and at the Wharton business school. This is what they teach them. Then they go all over the world and they do this type of stuff. So you just got to understand what script they're operating under. Then once you understand what script they're operating under, then you know what they're going to do before they do it because I know the script that they're running because I know how they've been trained, right? And there is no secret. It's in their documentation, okay? So this is what you got to really understand is that we're operating in a winner-take-all society that was created by these group of people. This is how they've been operating for almost 1,000 years. So if you can't show them that you're going to be the winner, they're going to take capital out of you and put it to where they think the winner is. They want to back the winner, right? And they see the winner being the first or the second in the market for that particular thing. The next thing is that I don't look at negative business news as entertainment. Like, I'm not entertained that everything's a scam. That doesn't entertain me because I'm here to make money, right? I haven't built my economy on social media or in real life about everything being a scam. That's not my economy. So I'm not negative news about the market is not entertainment to me, right? Negative news about the Federal Reserve is not entertainment to me. Negative news about shadow banks or Jersey banks, that's not entertainment to me. That news to me is only designed to facilitate way in which I can figure out how to make money out of the situation. I don't care about it for any other reason. It's not entertainment to me. So I don't look at negative business news as entertainment. My goal is to find an edge, and this is what I'm trying to get people to understand. So here's something I had posted on my YouTube channel on the community page. Crossborder Capital, they're a short reporting firm. They believe that HubSpot is overpriced in comparison to its value. I think HubSpot might be trading, I don't know, north of $400. It might be $550, $600. It's gone up a lot over the past year. So they says that trades at 20 times forward revenue. Okay, so it's trading at 20 times its revenue, or its forward revenue. I'm sorry. To me, this type of news is not like exhilarating. It's not, ooh, I don't reach out to Crossborder Capital and say, hey, can you look at this particular company to find out whether or not they need to be shorted? can you look at this particular firm and find out whether or not they're a scam? Like, I don't call Carrisdale Company and tell them to go after people for me, for my entertainment. They do what they do, and I read it, and I read their analysis as a way of, well, can this help me get an edge in the market? That's the only thing I care about. So one of the reasons in which I'm able to find these opportunities is because that's how I look at the game. You can't get my attention with telling me everything's a scam. So if you're going to tell me Nicole is a scam, my question is, well, how do you know that? And do I think that information is valid enough to where I can make money off of it? But you telling me Nicole is a scam just because you telling me Nicole is a scam, I don't care, because that's not going to help me pay my bills. You understand me? It's not going to help me teach somebody else the market. It's not going to help me with any of my goals that I have for 2023. But my goals are different, right? So my goal is to build an economy, not just be entertained by people, right? So you got to understand. So this is some of the reasons in which I was able to be successful, because of my belief systems, and also because of my perspective on how I'm going to operate in this particular market. Okay. So second thing is this: I know how to trade in real life, right? Not to toot my own horn, but I'm gonna just be real with you. Like, I actually know how to trade, like in real life, not on the internet. And anybody that's been around me long enough, that's had conversations with me, they know that to be true. When I was a media buyer, I wasn't running the biggest budgets. People was running way bigger budgets than me. I know people that was running campaigns for Fortune 500 companies. But by them talking to me and understanding, you know, the way I wish I could communicate my campaigns and what I had going on, they knew I knew how to buy media in real life. I'm watching I took a course by a guy named Tommy Powers. He's a big time YouTube media buyer. He's not really well known because he don't do YouTube at all, even though he's probably the top guy in YouTube media. And listening to Tommy Powers talk, I know that guy knows how to buy media in real life, right? Like in real life, this guy knows how to buy media just by the way he talks about it. So I know how to trade in real life. Do I have a hedge fund behind me? Nope. Do I have a multi-million-dollar account? Do not. Do I know how to trade in real life? Yes. And people that know how to trade in real life can listen to me talk and tell. And people that just making this up, they can tell too. Just like I can tell the other people just making it up. I'm not here to expose them. That's what they want to do, right? But I know how to trade in real life. So the reason why I'm able to do what I do, because I dedicated myself to learning this particular craft and learning this vocation. And I put a lot of time and energy into it. And I didn't expect it to happen overnight. But I actually do know how to trade in real life. Now, a person's perspective on the market may be different than mine. A person may trade differently than me. But if I break down my trades and why I went into the trade and why I came out and my perspective, they'll be like, okay, I see what you're talking about, right? They may have a different analysis, but they can see it because why? I know how to actually trade in real life. Okay. So that's pretty much how I've been so successful with put options. Let me go ahead and get rid of this. And let's go to any Q&A that we may have. So do we got any questions? We'll get up on out of here. So we got any questions before we get up on out of here? So let me stop. Let me start at the top. So Katrina says, I've been investing for a while. We're going to be a better trader. And you gotten a lot better just from how you're communicating to me. Like I said, hit me up for the one-on-one because I still owe you one from the testimony you gave me. It's all psychological. That's why we're going to probably, Julian Brown, set up the mindset channel, because it's 100% psychological. But everything in life is psychological. Everything is psychological. We've been taught that a lot of stuff is technical. It's not. Everything is from your mind, right? And that's really what our ancestors was trying to communicate to us, but we don't listen to them, so we don't know. But everything is from your mind, in my opinion, right? So trading, like everything else, is psychological. Relationships are psychological. Your health is psychological. Learning is psychological. So much of what you're doing is based on your psychology. And we've been taught that this stuff is technical because our psychology is under control of another group of people, and they're manipulating our psychology to get what they want out of this world. And we have no control over our own psychology. So many of our people can't even control themselves, right? They have no self-control. So of course they can't trade because they can buy whatever course at any dollar amount. Until you start controlling your brain, this market is going to manipulate you, because that's what it's trying to do anyway. But that's a really good point. And I appreciate all your support of the platform in 2022 and 2023. Appreciate it, Geechee Dan. You know what I'm saying? But that's what I'm saying is like, I know I actually can trade in real life. Like I said, I don't have $1 trillion behind me, but if I had $1 trillion behind me, I could do a lot more. So I don't have the kind of money behind me that the dude that made all the plays on the real estate market and then The Big Short. I don't have that kind of money behind me. That's what I was telling somebody else. I got to put the money behind me. We could do it. But I don't have that kind of money behind me. Also, I can make those kind of plays because of the money he had behind him, he was able to go to banks and get credit default swap created, because the average person don't know that credit default swaps are not regulated by the government because they're not sold to the public. So you got to go get somebody to make those kind of products for you so you can make those type of trades. But it takes capital because they're not going to entertain you. You come in there with $20,000. You got to come in there with millions of dollars for them to even entertain the fact that you're doing that. Right? So in my mind, I can trade just as good as that guy. He just got a lot more capital to deal with. Why? Because in this time that we're having right now, his people is on a run. They just having a run right now. Right? But we got to start planting the seeds with our people. So when it's our time, we can have our run instead of just being in the back seat, letting everybody else drive the car. Bias affects people's put call options trades. When you say affected, do you mean positive or negative? But just based on what you said, as I just think that based on your perception of the actual ticker or the play, it just determines how you're going to trade it. You know, because I may be looking at a company and I may be super skeptical, but my thing is that the market is not as skeptical. It doesn't matter how skeptical I am. Or I may be super bullish, but if the market is not as bullish, it doesn't matter how bullish I am. And I think a lot of people have a problem separating that in the market. So they're very bullish on a ticker, but the market is not as bullish. Now, you may have to believe that I'm buying in at a certain price point, and I believe that the market eventually is going to catch up to where I'm at. So like I said, when I bought the Peloton puts, the market was not as bearish on Peloton when I bought it. I knew they would, though, because I said all I needed Peloton to do was start putting out those earnings reports because they had already got it down. So the only way they were going to upswing is if they come out on next earnings and they guide back up, which I knew they weren't going to do anyway, because most fitness, they normally do the best time of the year at the end of the year and the top of the year. That's when they usually have their best quarters. As we swing into the spring and the summer months, most people, they lose their desire to work out, so they normally don't do as well. So to me, Peloton was never going to be able to get outside of that seasonality, right? So my bias of them was based on what I felt about them as a business model, as an organization. I just needed the market to catch up. Now, the risk was the market wouldn't catch up. That was the risk. The risk was that they could report bad and the market be like, whatever. Like DoorDash. You know, DoorDash has not reported really well, but the market hasn't decided to sell them off yet, right? I want to see how the market looks at car, even though car has been selling off like 3 to 4%. They've been slow floating that thing down every day. But when car puts out their earnings based on their share price when they report in February, I want to see how the market takes that, because that'll probably be their last really outstanding earnings for the life of that company. I don't see it getting better than that. Yeah, Eric, when Tommy Powell's on another level. And, you know, he don't play the YouTube a lot. The guy's on another level. That guy's like really the Thanos of YouTube advertising. So I bought his course because I need to know more about YouTube ads just so when I hire somebody, I can speak the same language as them. Yeah, he's on another level with it. Like for real, for real. So that's why I try to tell people, there's people that sell courses that don't need your money, because Tommy Powers don't need any of my money. He sells a course. The kind of ad budgets that guy's working with, my money to him is like $5. So he don't need any of my money, but he sells a course. So that's why I say a lot of people got to really wrap their head around like the reality of the scenario, because you have people that really want to give value and they can, but the perception of everything being a scam and course sellers being scam, a lot of people are going to stay fixated with it. They're going to stay stuck where they're at because of that mentality. Yeah, Tommy Powers is the real deal, though. And I've been telling people for years, some of the, and I'm trying to be racial, but I'm going to just say this. Some of the best media buyers in the world are black people, and they just don't get the credit, and they also don't get the promotion. But some of the best media buyers in this whole game of media buying worldwide are black people, and we're just on another level with it, but we don't get the credit, you know, because we're not doing the Lambos and the cars and that type of stuff. Definitely. You got to take what the market gives you. And it may not give you what you thought it was going to give you. Exactly. And nobody talks about that. And if they didn't have the capital, Geechee Dan, to keep going, they would have ran out of business. So I'm saying, so it took them 10 years to really substantiate themselves, but they was able to keep capital flowing through those whole 10 years. So without that capital, they just go out. So that's what I tell people is that, we got to really look at business. It doesn't mean you should not go into business, because in my mind, you should get some kind of business for yourself. I don't care if it's just a side hustle, right? You should figure out a way to, create your own economy, and you should focus on your own economy. That's something I learned watching the Erica Williams video this week, and I'm gonna really implement that this year. I felt like that's gonna be one of my affirmations. So I feel like I came up on that video for a reason. So I believe you should do that. And a lot of my West Indian people that I came up with, I didn't know many West Indian people when I was being raised that didn't work and have a side hustle. In America, we taught that we just supposed to depend on our job. A lot of that has to do with the amount of how we were so industrialized a long time ago. The Caribbean never got industrialized like that. So to survive for a lot of people, you had to have something going on. And it don't mean that that's because you're doing that right now today. You might be doing the same thing 5 years from now, right? So businesses, you can go in and out of different businesses. The goal is just to keep making money. It's not always to stay in the same business forever and ever and ever and ever and ever, right? Most businesses are not going to be that fortunate to do that because not going to be able to keep the capital running through it, or the market can turn on you. A lot of restaurant and bar owners lost their business because of this pandemic. It had nothing to do with them, right? Had nothing to do with what they did. Yeah, so market trend. I'm looking at a firm real hard. Really looking at them hard, but I need to dig into their internals. Because like I said, I think once that risk, this is not investment advice. I don't want people to take this and do what I say and, get caught up and then blame me. It's not investment advice. But I think once that risk-free rate starts to go up, I think they're going to have to charge more to their customers to do business. And I think if there's any economic downturn that could impact their customers, it can impact them. I think that's the same risk that Carvana has. Carvana makes a lot of money packaging up loans and selling those as ABSs to companies. I think you call them special development vehicles. Then they sell them to investors that are looking to get a return on that as long as the person keeps paying on the car loan. And that may work until it doesn't work, right? Depending on how risky those loan packages were, because we know that they bundle the loan package to make it less risky, but it doesn't mean it's not risky. I wrote down on a piece of paper, how can I get that data? So if that's the thing, and one of the ways in which they was able to really realize that the real estate market was suspect is because they was able to actually get the data on really the individualized demos of the people that they were writing mortgages on, and realize how those people are really high risk. But when you package it, right, it looks less risky. And then we also know that the rating agencies, I mean, they'll give you whatever rating you ask for if you got the right kind of bank attached to it, or you got influence with them, or they got a relationship with you. So these are the kind of things that I really want to get people to understand, because if we really start digging into this stuff, there's a lot of opportunity to make money. But we've just been taught to stay out of this space, which I don't know why. But for some reason, I know we can figure this out because we can figure everything else out. We can figure out that somebody got child support payments from 10 years ago, but we can't figure out how to make money in the market. Like, y'all is expert researchers, man. Y'all can get a lot of money out here. Yeah. I don't deal with penny stocks though, but I know what you're talking about. Appreciate it, Miss James. Appreciate it. Yeah, workhorse. Everything with workhorse was dependent upon them getting that United States Postal Service deal. So to me, that customer concentration was already narrow. Because even with that United States Postal Service deal, you got one customer. And you don't never want one customer in business. You got to have more than one. Because when they decide to not deal with you anymore, which they will do, eventually you're going to lose your customers and you got to replace them, or you're not going to have any customers. So to me, they were under a lot of, it was like, if we get this customer, we're a valuable company. Well, you didn't get the customer. So now what? So to me, the risk associated with them not being successful was greater than the fact that they were going to be successful, even with the United States Postal Service deal. I don't understand how we're launching these companies and they're supposed to be valuable because they got this small deal with this big corporation. Well, how come they didn't give you a big deal? You know what I'm saying? I don't get it. But you're a publicly owned company. So Rivian got a deal with Amazon for 100,000 vehicles, which if you actually read the document, Amazon can pull out at any time. They're not locked into that deal. But Rivian can't produce 100,000 anyway because they don't have the capacity, right? And even if they do, it's only 100,000, right? So that's really not a lot of vehicles. So I don't understand why the share price is where it's at this moment, because even if everything goes through with that, 100,000 vehicles is not a lot of vehicles for a publicly traded company. It's just not. But this is the market we're in. So I'm not going to do 30 videos on Rivian and why they're a scam. I don't care. I'm going to try to figure out, is there a downside opportunity that I can play based on how I analyze a scenario, and how can I make money on it? But I'm not mad at the guys that's doing the YouTube, because that's their economy, but that's not mine. So everybody got to play their position like short, so you got to get in where you fit in. Yeah, I seen one of their ads, I think, earlier this week. I think it might have been on YouTube. How much inventory a market maker has for a specific equity. When you say inventory, what do you mean? How much inventory a market maker has? So kind of break down what you mean by that, because I want to make sure I understand the question before I answer it. Definitely. I look for that too, especially if I can get it with low institutional ownership over a certain price. And I look at that chart and I see it's not a lot of support. I say, if it start looking bad for them, man, people going to start pulling out real quick. Because what I got in there is retail. What do I know about retail, Katrina? And I try to teach people this with the Kodak play. Kodak play is on the YouTube channel. Retail does not have the ability to create a price floor. They don't even know what a price floor is. It's an economic term. Retail cannot create a price floor. They don't know what a price floor is. So as the stock starts to get sold off, they don't know how to defend the price. The only people I've seen figured out how to do it is this AMC GameStop people. And they're not doing a good job at it either. But they was able to pull it off for a little while. But it takes a lot of work and it takes a lot of capital to do it. And you can't buy just at a low price. You got to buy at the price that you want to defend, not, oh, it's cheap, so it's on sale, but I want the stock to go up. If you're trying to defend the price, you're not doing it because you want the stock to go up. You're trying to defend the price. So one of the things I realized is that, because I saw with Kodak, I realized once I saw that play, is that retail cannot defend the price. They don't know how to do it. They don't have the organization to do it. When I'm looking at a stock like Kodak, it had 15% institutional ownership. It went up to maybe, I want to say 60. And I knew it was going to sell right off. So I got put contracts. It went up on Wednesday. I got put contracts on Thursday, and I bought some more on Friday. Should have got out that Monday. Had some volatility crush, but I learned a lot from that play. That play taught me a lot. And I missed the upside of it. And I knew about that play. I was one of the few people that heard that Trump was going to give them that deal. And I looked at the chart and I'm like, this thing's been $5 for like 5 years. And what they did is they had spiked up the IV of the calls. They had the calls, they had weekly calls at the money was like $500. I was like, man, I'm not paying $500 for that. But that next morning, that call, when it ran up, went up to $1,800. So, you live and you learn. And one thing I try to tell people is that the longer you stay in this market and you keep observing it, you'll start to pick information out. And this stuff is going to happen again because we're dealing with human behavior. Yeah, definitely. It wasn't. That's just, and we've never decided to transition in this space for a lot of different reasons. But we don't have a belief system that we should be in this market. And we let other people tell us we shouldn't be here. And my question is, why is y'all trying to keep us out? Especially our people. They're not trying to keep us out of anything else. So, the Black excellence, quote unquote, movement, we supposed to become attorneys, doctors, lawyers, presidents, yada, yada, yada. But when it comes to the markets, y'all stay out of that. It's like back in the 50s and the 60s, they was telling Black people, especially down south, don't get involved in politics. Y'all not supposed to get in there. That's for Anglo-Saxons. But you paying taxes, though. Because what they had done in certain places is they had ran Black people out of politics, especially on the local level. They literally did it with violence. They ran Black people out. So then the narrative got, well, you're just not supposed to be over there. But that's where all your power's at on your local level. So the way we keep y'all disempowered and unempowered is we tell y'all don't get involved in local politics, but y'all still going to pay us our taxes, though. Y'all still going to pay property tax, right? Y'all still going to pay consumer taxes to the county or the municipality or whoever, but y'all not supposed to have any involvement in taxes. Then they get people that look like y'all to tell y'all not to do that. It's real crazy out here, man. This world is very, very interesting when you sit back and think about it. Yeah, Geechee, I told people before, if you can make a lot of money on the drug stocks, but you got to deal with the volatility, and you got to almost become an expert on the pharmaceutical space. I don't really like studying the pharmaceutical space like that, but there's a lot of money to be made, whether they make it or not. There's a lot of money to be made in the pharmaceutical game. Just trading it and also playing it with options. But you got to really dedicate yourself to that pharmaceutical space, and you got to like researching that type of stuff. And I really don't, but there's a lot of money over there. Those companies are so volatile, it's crazy. A company can be $10 one day and later that week be $150 just because they passed some trials. Okay, let me go down. Yeah, definitely. You know, they had no business. I think what's his name, Chapman, was saying that he's short MasterCard and Visa. I said, okay, man, I feel you. Like all his SPACs have got killed this year. So he's just trying to figure out how to stay relevant. You know, these guys got all the money, man, but they want attention too. You know, it's weird, but it is what it is. You know, they put him on the television, so he got to talk about something. But his SPACs got killed this year. Like Clover got hammered. And he talking about he bearish on MasterCard and Visa. It might work for him. I hope it does. Let's see. That might be the next thing. Okay, I appreciate you got something out of it. Yeah, read them SE. That's the real deal. I wanted to get puts on Duolingo. They just options chain is terrible. The options chain is terrible. But I think they sell off. But the options chain is just so thin. I couldn't. That's why I said if I had capital, I could put open interest on that option chain because I have the money. So I could create a market there, but I can't create a market with 3 contracts, right? But if I had the money, I could create a market. And that's what certain people can do because they have the money. There was a ticker that I'm on that was very thinly traded for a long time. And now I'm starting to see a lot of money get on that option chain because before the market closed on Friday, somebody bought like $50,000 worth of options on that same contract that I'm on. So that's the thing. When you got the money, you can create a market over there. Definitely. And there's a lot going on over there. We're not going to get into it. But there's a lot going on over there. Okay, they're in Sandy Spring. Yeah. We're going to just see how long they stay propped up, get you Dan. Somebody's propping them up for a reason. I think I want to see them go until they lock up. I think they got another earnings before that. And then we're going to see what that look like. But I got enough time on the contracts to where I don't have to really stress it. You know, and I bought pretty much at the money. So I got the theta and I got the intrinsic value. If I can get that thing, I really, if I can get those to hit 80, you know, we'll be in a very, very good position. Right. And to start working down from that $80 mark. But I'm very confident that, you know, things are going to go in my side and weigh in whether I should go in even more. Because I think they can make it work, but I think their share price is totally separated from their value based on what they're going to have to accomplish because they don't have the ability to produce. And if you can't produce, you can't sell anything. So why are you worth more than Ford? Definitely. And that's the thing. So they should come partner with me and they do research. And I can pay them what they charge to do research. Because right now they're doing research just to get a little bit of YouTube attention. And I will pay you to do some research if I know you can do real good research. Right? So that's the thing is that, you know, looking up, seeing this type of, it's like, how do you get money out of that? But they don't want the money. They just want the attention. But, you know, people out here, everybody out here for a different reason. You saw how it looked, Flash Wave. I heard when you put freight on it, the battery depletes really fast. Right? And I think that's one of the issues with the EV cars. Is I heard when you put freight on the truck, the battery goes down real fast. So it's kind of just like a consumer truck just to drive around. Because one thing I always was told with a truck is if you got a truck, you can always make you some money because you can haul something. But I heard once you put freight on that Rivian truck, you don't get a lot of battery power out of it. Yeah, they don't have the smarts. They don't have the organization also. But really what they need is, they need the money, but they just need to know how the market works. You know, and that's 100% correct. You know, people that know how to work a position in this market, they make money regardless of the situation, which is what I really want to teach people how to do, right? Because funds work positions. They don't just, they invest long term, but they work positions. And they give money to people to work positions, right? That's what they do. So they work a position. They don't just put their money in and go to sleep on it. And there's nothing wrong with that if that's what you want to do. But we're only taught that. Because one of the biggest issues, Geechee Dan, is that you can't go to a school of finance and learn how to work a position. This is taught in the industry. So our financial people, quote unquote, don't know how to do that. And instead of them saying, well, I don't know how to do that, and let me bring somebody in that may know how to do it, that have expertise in that area, they just act like it doesn't exist. But this is the same companies that I'm investing in the whole long term. Funds are working that position up and down, right? Because that's how they're making their money. So they buying long and they buying put contracts to push it up. They buying they buying put contracts to push it down. They buying put contracts against downside risk. They're buying heavily into I think Steam might be a publicly traded company, and then they buying puts on GameStop and whoever, because they believe that if Steam goes up, GameStop's gonna go down. So we don't understand how to work positions. We're not taught this type of stuff. You know, so I buy into who I think is going to be the leader in this space. Let's say I buy into Teladoc. This is not investment advice. Well, who's Teladoc competitors? Company 1, 2, and 3. Well, let me get puts on them, because I think as Teladoc starts to go up, I think they're going to go down, because I think Teladoc's going to take all the market share, right? We're just taught to just buy Teladoc. But then what if Teladoc, let's say you buy Teladoc, but you're losing opportunity in these other plays, or we're taught to buy Teladoc, but don't get protected puts on it. But then what happens if Teladoc goes down? And that's why I put a link in my community page. There's a congressman, I think he's from Alabama or maybe Arkansas. He got a bunch of options trades, right, that he had to report. His trades are just so out there. I don't even know what he's doing, but he's doing it for a reason, because I guarantee he's not guessing. Yeah, definitely. That's a fact. And we were run out of government all over the South. And then they told us the government's not for y'all. Y'all don't do government. You know, don't do government. Just work, pay your taxes, and stay out of our way. Let us run this. And so we got to understand, why are we being told not to be in certain spaces by our own people? Right? And so this is what, and a lot of us, they told certain people that was influential in our area. There's a really good documentary called I forgot, like Spies of Mississippi, about how when they started to go into Mississippi, they tried to start registering people to vote. You had a lot of people that was kind of like institutionalized in these areas, a lot of funeral directors, people of that nature, that was making money because of segregation, because of legal segregation. And they kind of sided with the Mississippi state police. They had like their own version of the FBI. They got a lot of those down south. And their job was to go to like meetings and photograph photograph licenses and things of this nature, and then give that information to the police about who was at the meeting and yada, 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 because they were telling black people, y'all don't need to get involved in local government. Y'all shouldn't get registered to vote. So, you know, we always got to be wary when people are telling us to stay out of a space that is institutionalized. This is not, stock market is not fly by night. It didn't pop up over the last 10 years. It's been here. They were doing this with the Dutch in the 1500s. The U.S. stock market is very mature. It's been around forever. There's trillions of dollars of revenue in it. And we're being told that we shouldn't have any involvement in it outside of maybe buying it and just holding it. You know, we don't produce people that operate in any other part. We don't produce people that do leverage buyouts, yada, yada, yada. We should just, so why do we have this perception that, well, the average person can't wrap their head around it? So I just think that's really interesting. Yeah, I read about that. Drop 16, I consider low under 50%. That's my personal number. It may not be your number. I consider low under 50%. You'll see some companies got 110% institutional ownership. I studied them. and I studied market makers and understood their role. So like I know the role of capital, not capital, Melvin Capital. I'm sorry, I mispronounced that. I know the role of Citadel, not what the people on YouTube are saying. I actually went and researched what they actually do and how they facilitate the market. Like, what is their actual role? So what is the role of a market maker, irregardless of the name of the company? But to know that, what is a market? How do markets actually function? Right? Because what we do in America is we don't teach people how markets work. So how does a market function first? Then how does a market maker work to help the market function? Because I tell people most people don't know, you may know, but most people don't know. This is something I teach in my course, is that when you're in the stock market, the company that you're representing, they don't even own no shares. So this is what I'm saying. We don't even understand what we're buying into. So when I'm buying Apple stock, I'm not buying Apple stock from Apple. I'm buying Apple stock from a market maker. See what I'm saying? So if I was to go work as a trader for a firm, working trade and sales, they're going to probably make me a market maker over a book. And my job is to work that book. So I know, like when you had that Kodak situation last year, I know the market maker for Kodak was like, what are y'all talking about? I got to start setting calls and I got to start setting a bid ask for Kodak. I haven't worked that book in 2 years because the stock traded $5 with no volume literally for 4 or 5 years. It was traded horizontal. So I know when they called that guy, I was like, man, what does the Kodak book look like? He was like, what are you talking about? I haven't worked that book in 2 years. That's a dead book. So because we don't really understand, when you buy a stock, yes, you have equity in that company, but you don't buy the stock from the company anyway. But see, to understand that, you got to understand the IPO process. So there's so much of an education that we don't understand that I learned before I ever bought my first option, right? That I try to teach people in my course to get them to understand the fundamentals, because the goal is not just to make you an options trader, is to get you to understand how these markets work. Because once you understand how they work, then you can manipulate them the way you need them to manipulate, because you understand how they actually function. So I understand when I'm buying a stock, I'm not buying the stock from the company, I'm buying from the market maker. So what is the market maker's role in this particular market? What are they trying to do? So then once I understand what they're trying to do, then I understand how they operate. But to get to that understanding, first I had to understand that what a market is, and then what is the market maker's role in the market. And based on that particular market, they may have a different role, right? But these markets don't exist without market makers. So these people talking about they want to bankrupt Citadel. Okay. See your money get trapped in that company. You're not going to be able to get out of that deal, but you're going to find out the hard way. But you're not going to crack Citadel anyway. That's not going to happen. Definitely. And they the buy, seller, last resort. And without those market makers, our markets are very illiquid. So what that means is that you can put in an order and it may not get executed to the next day. Right? So I don't think we understand, because of electronics and because of liquidity and because the actual security doesn't have to actually be there at that time. It makes our markets really, really illiquid, really, really liquid, which means they move very fast. And people advocating to get rid of market makers, I don't think they realize a world in which you can't get a trade executed until the market closes. So then you can't move in and out of multiple positions, right? You can't buy a trade at 9:45, sell it at 10 o'clock, go back into another trade at 11:30, sell it at 1, even with, a cash account the way you don't deal with the PDT, where you can't do it. Why? Because the market maker got to operate every trade manually. Want to get rid of dark pools. Well, you need dark pools. So I just think us not really understanding the market puts us in a situation. Yep, that's a fact. That's a fact. And that's one of the reasons why they pushed everybody out. Because they realized that these people was going to move up economically and politically. And that's something that's not talked about. Because we also don't talk about that the Civil Rights Bill of, I think it's 67, 68 was really the second one. The first one was right after Reconstruction. I'm sorry, the first one was right after emancipation during Reconstruction. That was the first Civil Rights Bill. And that's why black people started making so many gains. Yeah, you'll see on the 7th. So look at, when you get a chance, look at Rivion's institutional ownership. Look at Rivian. Exactly. And they get paid. I got a video on that on my YouTube, right? With the guy that owns Melvin Capital. He's the richest guy or the most wealthiest guy in the state of Illinois. I tell people all the time, they make money on the spread. So they make money on volume. They don't make money on any individual transaction. So everybody that bought AMC made the market maker money. Doesn't matter to them. They don't care if the stock goes up or down. They don't matter. And they don't pay for the shares that they trade. They make their money on the spread and they make their money on volume. So, but if you don't understand how the market actually works, you'll start believing these myths around the market. But I mean, they have great positioning and they facilitate their very necessary, because if we go to other markets, like last night I was looking at the Jamaican market, they do very low volume, right? They don't have the volume that we have here. So they don't have a robust market, because I don't know who their market maker is, but they just don't do a lot of volume. Facts. What they're keeping you out of is what you need to look at into. I agree with you. Blue Sox, when you say after the IPO, you don't deal with the company, what is that you asking as a question? I don't necessarily understand what you mean. What new course? Yeah, we'll see. I mean, I think GameStop eventually will do another issuance, but we'll see. AMC got so many shares. AMC got almost 500 million shares. They might have 700 billion by now. So we'll see how it goes. So that's pretty much going to be it. I appreciate everybody for coming through. Let me see something real quick, because we got 67 likes. We got 94 viewers. So if you could get those likes up. So what I really want to tell everybody, man, you know, it's top of the year. Repeat myself. Try to hit this first quarter running. You know, whatever you're trying to do, go do it. Try to get you some good momentum up under yourself. Because I don't want you to look up and we going into March. So we going into the second quarter and you still haven't kind of like done what you wanted to do. So whether you take advantage of my offer, you know, do something to try to change your life or to try to put yourself in a better position. Because I really don't believe the economic situation is going to improve for the majority of people because of the way in which they're turning this particular economy. So I want to encourage you to look at what I have to offer, look at what other people have to offer that you feel like is valid, you know, and really investigate that and just kind of determine if that's going to be the best scenario for you, but try to get into something, right? So this is David W. Williams. I appreciate everybody for coming out. Talk to you later.